Hey guys, this video is going to be a breakdown of the 5 best Vanguard ETFs for beginners if investing in funds that are low cost, diverse, and that have a strong track record of growth and success is what you're looking for, then Vanguard ETFs and this video are for you. I'm Sean. If you're new to the channel, thanks for being here. Definitely subscribe for more money made simple videos. Vanguard is a brokerage that has been around for years. They are the leader, they are the GOAT, the king of index funds because of the strong returns, diversity, and ultimately the low-cost funds that Vanguard provides. According to data provided by Vanguard, the average Vanguard mutual fund and ETF expense ratio is actually 83% lower than the industry average today. Over time, the savings really does add up. Compared with the industry average, Vanguard investors save more than $35,000 in fees over 30 years on an initial investment of just $50,000, according to a Vanguard analysis. I'll leave a link in the description for how to get signed up with them and start investing on their platform. Enough about that, let's get into these 5 best Vanguard ETFs to add to your portfolio. First on our list, and this is my personal favorite, it's the Vanguard Total Stock Market ETF, ticker symbol VTI. This fund seeks to track the performance of the US Total Stock Market Index. So you have large, mid, and small cap equity growth and value style companies. It employs a passively managed index sampling strategy. In layman's terms, you are getting the entire US stock market with this fund. 4,124 stocks make up this fund with over $1.3 trillion in net assets. The expense ratio for this fund is 0.03%, which is literally unheard of, meaning that $1,000 invested would cost you $3 annually. You really can't beat that, with the exception of a few funds from Fidelity that have a 0% expense ratio. Here's a look at how this fund has performed over the last 1, 3, 5, 10 years, as well as since inception or when the fund first started. I always like to see what the 5-year return is anytime I'm investing in index funds, ETFs, or mutual funds. Vanguard also has a risk potential chart that goes from 1 to 5, with 1 being less risk, less reward, and 5 being more risk, more reward. The Vanguard Total Stock Market ETF has a risk potential of 4, but I consider this fund to be extremely diverse if that is something you want to add to your portfolio. Moving on to our second best Vanguard ETF, and that is the Vanguard REIT Index Fund, ticker symbol VNQ. If you are unfamiliar with what a REIT is, that stands for Real Estate Investment Trust. This fund invests in stocks issued by REITs, which are companies that purchase office buildings, hotels, or really any other real estate property. The goal is to closely track the return of the MSCI US Investable Market Real Estate 2550 Index. That was a mouthful. This offers high potential for investment income and some growth, so essentially share value rises and falls more sharply than that of funds holding bonds. This is a fund that is appropriate for helping diversify the risks of stocks and bonds in a portfolio. There are actually 170 different stocks that make up this REIT fund with over $84.4 billion in net assets. You can also see the diversity among the different sectors of the real estate market that make up this fund. The expense ratio in this fund is 0.12%, meaning that for every $1,000 invested, you would pay $12 annually in fees for managing the fund. Here's also a quick look at the average annual returns for this fund over the course of 1 year, 3 years, 5 years, 10 years, and since inception of the fund. Notice the past 1 year has done really well in the real estate market, but remember that is partly because of the uncertainty and drop REITs took as a result of the pandemic. Vanguard REIT Index Fund has a risk potential of 4, meaning it leans more on the side of more risk, more reward on the scale. The Vanguard S&P 500 ETF, ticker symbol VOO, is next on our list of the 5 best Vanguard ETFs. This ETF invests in stocks in the S&P 500 index, representing 500 of the largest US companies. The goal of the fund is to closely track the index's return, which is considered a gauge of overall US stock returns. It offers high potential for investment growth as share value rises and falls more sharply than that of funds holding bonds. The S&P 500 Index Fund is more appropriate for long-term goals where your money's growth is essential. There are 511 different stocks that make up this fund, and it has over $829 billion in assets. I also want to share a glimpse of the top 10 holdings, as well as the portfolio composition of how each sector is represented in the fund, which obviously aligns with the S&P 500. The expense ratio for this fund is once again 0.03%, like VTI, which is once again literally unheard of, meaning that $1,000 invested would cost you a mere $3 annually. As we look at these returns, I'm very impressed by these returns. I'm impressed with every fund's returns that we are looking at on the list, but this fund has done very nicely with averages of between 15 and 16% annually over the long term. As we look at the risk potential for VOO, it received a 4, which leans more to the higher risk, higher reward side. Fourth on our list is the Vanguard S&P 500 Growth ETF, ticker symbol VOOG. You might be thinking this seems very familiar to the fund we just mentioned, but let's look at what this fund is designed to do and how it's actually different. This fund invests in stocks in the Standard & Poor's 500 Growth Index, which is composed of the growth companies in the S&P 500. VOOG focuses on closely tracking the index's return, which is considered a gauge of overall US growth stock returns. It offers high potential for investment growth, and the share value rises and falls more sharply than that of funds holding bonds. This fund is more appropriate for long-term goals where your money's growth is essential. There are actually 242 stocks that are in this fund with $7.2 billion in assets. The top 10 assets make up over 50% of the fund, and here's a look at the sectors and the percentages that each sector makes up. You can see this fund is very high in information technology with more than 40% of the holdings there. The expense ratio for this fund is 0.10%. That means that $1,000 invested would cost this ETF holder $10 for every $1,000 that we just mentioned. I thought the last fund had nice returns over the short and long term. The VOOG fund has returned more than 20% annually, as you can see, for the 5-year. And that's just fantastic.
These are fantastic. Fantastic.
Not only that, the Vanguard S&P 500 Growth ETF has a score of 4 on the risk potential scale. I actually thought this fund would receive a 5 since it focuses on growth stocks from the S&P 500 and has such a high percentage of assets in the information technology sector, but it is the same as the rest that have been discussed so far. Last but certainly not least, we have the Vanguard Total International Stock Market ETF, ticker symbol VXUS. This ETF seeks to track the performance of the FTSE Global All Cap ex-US Index, which measures the investment return of stocks issued by companies located outside of the United States. It has broad exposure across developed and emerging non-US equity markets. There are 7,760 stocks that make up this fund with more than $415 billion in assets. Here are the top 10 largest holdings that emerge from this fund, with just under 10% of the total amount of assets held in these top 10 companies. And this chart gives you a better idea where most of the holdings are allocated from, so you can see the breakdown of the different regions or continents that are represented. It's heaviest in Europe, but has pretty broad group of assets represented elsewhere. The expense ratio for this fund is 0.08%, meaning that for every $1,000 invested, you would pay $8 annually for Vanguard to manage the fund. As you can see, the returns for this fund are below each of the other funds I've mentioned before. I do think it's still a good idea to have some exposure to the international markets, and that's what this fund gives you. In regards to the risk potential scale, this is the one and only fund on the list that did receive a 5, which is the highest on the scale for more risk and more reward. After going through our 5 best Vanguard ETFs, I hope you found some value in our research and why these 5 made the list. If you like one or several of these funds over others, let us know in the comments. I want to just have a brief chart displaying some of the essential information associated with each ETF. Also, I just want to mention there are risks anytime you are investing that aren't unique to Vanguard. Investing market traded instruments always involves the risk of principal loss, and past performance is never a perfect predictor of future returns. Also, invest in accordance with your risk tolerance and financial objectives, and if you're not sure how to assess either or both, consult a licensed financial advisor. Thank you so much for watching. Don't forget to subscribe, and I'll see you in the next video.